Hello and welcome to the Devere live webinar series. My name is William Chaford and today we are live from Shanghai, a lockdown Shanghai, but we are here. Devere is still here in Shanghai. Don't worry, we haven't gone anywhere. And we're doing this webinar, especially for the people that are locked down in Shanghai, but also across China and anyone who is, friends of Devere in China as well, listening in. We've had people all the way across from Italy, US, all sorts of places log into our China webinars. So we're glad to be reaching out to you today. And the topic we're going to be talking to you about today is cryptocurrencies. And specifically, we're talking about the topic of what happened with Luna, with the stablecoin Terra USD, or UST as it's more commonly known. And really trying to understand what happened there and what it really means for people that are holding cryptocurrencies, and perhaps what the future may hold. And so we've got, well, hopefully we're going to have three guests. One of our guests is Ben from Woo Network, although it is, here he is as I speak. I know it is 4 a.m. In San Francisco where he is at the moment. So we're delighted to be joined by him, and also Aaron Springs, who is a trainee wealth advisor here in Hangzhou in China for Devere Group, and Sebastian Restrepo, a senior wealth consultant for Devere Group as well in Shanghai. So guys, if you want to turn your cameras on, your mics on, come and join us. Hi, Ben, how are you?
How you doing, William?
Pretty good, pretty good. Good morning to you over there in San Francisco, right?
Close, yes. West Coast, US.
West Coast. Very nice, good stuff. So today, guys, what we're going to do is going to be very much an open discussion, a general sharing of ideas, sharing of thoughts about what's happened and what we're expecting in the future. So everyone who's listening, hopefully it's not your first time on Zoom, but if it is, look for the chat box. And what I want you to do is get your questions in there as much as possible. I've obviously got a few questions prepared, and I'm sure we'll be asking around a few different questions, but I want you guys to throw in your questions for the panel, and I'll get as many of them across to them as possible. Okay, so throw it in the chat box there whenever you want to. But what I'm going to do first of all is wake up Ben first of all and say welcome, and tell us more about yourself, Ben, and Woo Network and what you do.
Oh yeah, great question. So Woo Network, we are a liquidity provider, which means we work with a lot of the top exchanges to provide assets on for trading, and this is across CeFi and DeFi. Our partner is Kronos Research, which is one of the top 5 to top 10 market makers in the world. On top of that, we operate WooX, which is one of the top 10 spot exchanges in the world. So we understand the trading space pretty well. Like on a personal note, I was in China for about 10 years. I guess that will be something relevant to the listeners. Was recently in Shanghai, but due to the lockdowns, came back to California, where I'm from originally. So that's some personal background, and I'll throw it back to you, William.
Nice. Yeah, one of the lucky ones who've managed to escape. Good stuff. So Seb, I don't know, you want to start us off and let us know what happened to Luna. Give us some background on this whole situation.
Thanks, Will, for having me as well. Thanks, guys, for joining as well. Hi to all of you. Hi to all the people who is watching to this webinar as well. To get a little bit of background, I basically do wealth management, and within that, I'm kind of the specialist, or basically the person who the colleagues or the other team comes to me when it comes to cryptocurrencies, because I do have, I've been doing it for at least 6 years, more or less. So I do have I would say, a credible background and knowledge on it. So I don't know. Let's start with the Luna debacle kind of thing and what happened there. So to explain to all the people what Luna was, it was basically a protocol very similar to Ethereum or to Bitcoin or to Polygon or another cryptocurrency. And what they're trying to do, or what they're trying to create, was to create basically an algorithm stable coin, which basically means that they were trying to back up their stable coin using their token, which was Luna. But unfortunately, again, and this is something I always recommend to people, is like when you're dealing with things new, technology that is new, there's a lot of things that you don't know, right? There's a lot of unforeseen things that can happen that you don't really you don't have a background or you don't have a feedback from previous things. So you don't really know what's going to happen. And what happened here is that supposedly, and this is not confirmed, although the creator of Luna basically says it was like that. And I'm kind of inclined to believe that. And if there was an attack on their stablecoin algorithm, basically they were trying to do something called like a bank run. A bank run basically means if you go to traditional terms of a bank and everybody's trying to take money out of the bank, then that will destabilize the system and basically collapse the currency. They did the same, but in digital terms, basically. So what happened is that while everybody was trying to take money out of USDT, the protocol was kind of trying to stabilize it by creating more Luna. And that way, it basically collapsed the price of Luna as well, because it just created an oversupply of Luna. And that way, when the peg was lost at 0.90 cents, I think it was game over. And it just started to spiral down incredibly fast. So in less than 48 hours, the whole currency collapsed to 90%, 99%. So that was basically what happened. So to pull that attack, and this is the thing that they were trying to say, you roughly needed $1 billion in assets to pull off that. So far, nobody has confirmed or kind of proved how or who was behind that. But a lot of people in the crypto space are suggesting that it has to be a very large fund due to the amount that you need to perform that attack. But it just rectified what I always tell my clients: don't put all your money in something that might look promising. It might look giving you good returns, but at the end, this is new technology. It's things that are very unregulated, and unfortunately, it can happen that external forces attack you and basically collapse your entire project. So that's what happened. I honestly don't think it was a scam or anything like that. I personally think it just was a flaw in the algorithm that was prone to that kind of attack.
Go on, Ben, what would you add to that?
Yeah, I mean, I'm thinking for someone who maybe isn't very familiar with the space, it's worth mentioning that this was probably an element of hubris at work. The owner was very arrogant on social media, and he often invited attacks. Right, so this is not some, institutionally sound mechanism that was attacked. I think a few weeks prior, someone had actually mentioned that this attack was possible, and he basically invited them to try. And it's during bull markets, a lot of these algorithms are very they work, right? Because the prices go up, everyone's ecstatic, they're euphoric. If things start to fall, they throw more money in, they buy the dip, they do all that. The moment the markets turned, this is through more macro events, it's a different ballgame, right? And you saw the panic right away. But yeah, it was a really well-timed, we're calling it attack. I don't know if even an attack is fair, because shorting markets is something that people are can do, right? That's not illegal in any sense. And the Luna Foundation, LFG, let's call it that, is what they're called. They kind of brought it on themselves by recently using Bitcoin, which is another high-risk asset, to collateralize UST. So that just kind of tightened up the mechanism a little bit more, leveraged up the mechanism. And so when this attack happened, it just fell apart right away. So that's all I wanted to add, in case anyone was unsure about how stable this was.
Yeah. So actually, on that point, sorry, Will, to interrupt you.
No.
I wanted to add to that point that just because a coin or a currency is called stable or stable coin, it not necessarily means it's a stable coin. So I know it sounds kind of redundant, but it's true. You have to verify what assets are actually backing up that state or that stability, so to speak. So I think we're going to speak about some other assets that behave a little bit more in the terms of real assets being collateralized to be called stable. And I think when it comes to algorithm stable, it's a little bit more risky, way high riskier than Bitcoin or whatever other cryptocurrency.
That's a good point, Seb. I would definitely say, looking at just three other stable coins of USDC, USDT and DAI, for example. Of course, DAI being on the decentralized side and that being backed by crypto assets versus looking at a USDC where it's pegged for one with the dollar, supposed to be backed by the dollar. And then, of course, we got Tether, where they're saying they're backed by the dollar and assets, whatever assets means with Tether. It's definitely interesting with these stable coins, that are all supposed to be stable, how their backing can be different and how, of course, the changes with the market can impact their stability of being a stable coin.
Do we know how much was lost? I mean, do we have any figures? I mean, obviously we know the percentage lost, but do we know how much money was kind of in there and before when these drops started happening?
They're estimated that around 50 billion were wiped out of the market, something like that.
Wow.
Which is a large sum, but in a macro level, it is not that much, but it still generates waves in the entire space because any bad publicity, well, it comes back down to the original crypto, which is Bitcoin, right? So Bitcoin also took a hit. Like Ben said, there's also a lot of macro things going on in the world that affects as well. Inflation is highly correlated with that. We see it all over the place, not only in crypto, we see it in the SP 500, we see it in all industries around the world are taking a hit. And this is basically due to global inflation and other macroeconomic things going in place. So, I mean, to reassure people that are in crypto, I would say it's just another bear market. If you're being here long enough, like I've been through several of these. So I experienced it from going to 20,000 to 3,000. So I know how painful that looks. However, if you hold it and you stay enough in the game, you should be fine. The thing that I would advise is don't put all your money into that thing. I mean, just all your bag into one thing it's just crazy. I will never recommend something like that.
But people are though, right? I mean, because there's the sense of security there, right? Because the reason people were using UST, it was either to be going between cryptocurrencies, or maybe they were feeling that there was they just want to stay put for a little bit, see how the market goes and go back in, and they just feel like they've got cash in the bank. I imagine there's a lot of sort of retail investors that just felt it was the equivalent of having cash in the bank and it's waiting for them to go back in, and it'll be a real shock to them, won't it? As anyone who wants to answer that.
Yeah, that's definitely the truth. I mean, that's the purpose of a stable coin, for to be able to put yourself in a stable position, or to put yourself in a position to see what the market is going to do before you decide to hop back into the market. So, of course, with it being different stable coins out there, even as Seb said, you can diversify yourself across different stable coins. And a lot of times, of course, depending on what type of exchange you're using, it's going to give you the option for the different pairs of a Luna or USDT or USDC, whatever it is. It's going to give you some different options. So yeah, definitely, it's wise to spread it across if you are going to trade back into a stable position.
I would disagree with Aaron in certain things there, but not in a bad way. I mean, I will not use stable coins as a means of storing wealth, for example. Why? Because for me, stable coins are more operational kind of thing. When I change between coins just to get some stability in the market for a short period of time, and then I come back again to the asset that produce, or the assets that I think are more valuable, like Bitcoin or Ethereum. So I will not recommend using stable coins for keeping your wealth, even if it shows you promise like UST, like Luna was giving you 20% per annum, which beats every asset in the market. And even if it gives you that, it's still high risk. It's still really, really high risk because, again, unregulated market and algorithms are things that we're still developing. It's not proof sound technology. So, I mean, I will encourage people to explore stable coins for sure when there is volatilities in the market, but I will not recommend or advise to keep all money stable in a stable coin for a long period of time.
Okay. Go on, Ben.
Oh, thanks for the invitation. Yeah, didn't want to make any enemies at 4 a.m., so put the hand up.
No, just jump in when you want to. Go for it.
Okay. Yeah, I mean, there was an interesting thread on Twitter by SBF, who is the founder of FTX, one of the largest exchanges, right after the incident. And, he mentioned that just because you call something a stable coin doesn't mean it is. And so perhaps this is probably the fault of the industry, that these algorithmic stable coins, which I think, Sebastian or Aaron and Sebastian have both touched on, they're very experimental, right? They're not battle tested. And so probably the industry is not doing itself a favor by calling these things stable coins, because when they do blow up, and there's a very high probability that they will, it invites the regulators to look at the space more. It hurts retail investors, right? And I know to some degree, Luna wanted retail investors to feel safe with UST, and that was part of the whole marketing appeal of the whole ecosystem. But it's more of like he called them structured products, right? I mean, it's something that you can get some yield on by staking the Luna, and then it's supposed to be stable. But I mean, calling it a stable coin is probably doing ourselves a disservice. And I think everybody who follows the space quite closely, if you're looking for something that's more of a store value, I think USDC is generally regarded as one of the most stable.
Yeah.
Everyone's pretty worried about USDT. And then BUSD, which is from Binance. I think everybody who believes in the kind of the solvency of the entire industry, BUSD is obviously redeemable for dollars. So, I mean, those are ones that would be more safe haven assets. And then these algorithmic stable coins, a lot of people would use them to try to game the rebase mechanism. Or in this case with Luna, they were just after the yield, right? So I think towards the end there, after Luna started to just experience this parabolic, gain in value, that a lot of retail investors were getting burned, because you had that 20% fixed yield, which was just insane. And you saw a lot of retail investors posting on TikTok or other social medias, like, this is how I'm going to buy a house. I'm going to take a loan. I'm going to put it in this, Luna protocol. I'll be earning 20%. My loan is 6%. I'll take the extra 17% to pay off the mortgage. We saw a lot of that. And there's definitely some lessons learned. And there always is with these end of cycle, protocols that cause a lot of damage. Not just to investors, but also to the space as a whole. So I think I went a little bit off topic there, but I think I hit on a few points that, just because someone calls it a stable coin doesn't mean we should all, believe that, right? Because there is always an element of marketing at play.
Yeah. So what makes you say that these ones are, I know Seb and Aaron are both nodding as well, these ones are more secure, but what makes them more secure than what happened? I know you talk about algorithms behind it, but what's behind these more sort of stable ones?
Well, USDC, is backed by Circle, which is one of the largest players, and they're very regulated in the US. And they claim to be redeemable. They are redeemable actually for dollars, through the US, right? And BUSD is also redeemable. So that tends to be more stable. And also USDT, it's the whole too big to fail meme. We haven't seen anything go wrong in the last cycle. The last 4 to 6 years, people have been complaining about Tether and wanting them to open the books, and then they briefly open the books. But probably a very dangerous thing there. But I would say, USDC and BUSD are probably more stable in that regard.
Yeah, I will agree with Ben. USDC Circle, it's highly regulated. In US, it's basically treated the same as a custodian bank. And if you know a little bit about that, then custodian banks are basically, the word says it, they're custodians of the money. So in that sense, they're more regulated, I would say. BUSD, I agree with Ben, I think it's a little bit more based on Binance, but Binance being the largest crypto exchange in the world, they're moving into the regulation side as well. So I'm pretty sure in a future where we'll see cryptocurrencies more regulated, I think Binance, Coinbase will have the say on how we regulate these things, because they're just the largest exchanges in the world.
I definitely I agree with both of those guys, but I do want to play devil's advocate as well. and say, of course, USDC, definitely 100%. That's my personal favorite stable coin. But when we think about crypto from the aspect of decentralization, and that means one of the big things that a lot of people are gravitated towards, the decentralization part. We got to think about coins like DAI as well, that are a decentralized stable coin that are actually backed by other cryptocurrency assets. So of course, the ones that are going to be more centralized and regulated, like USDC. Of course, if something happens, if they're regulated, they can shut it down. You got something like DAI in the background, because it's decentralized, it can't be stopped. It can't be shut down. There's no, governance over that. So, of course, you got to look at both sides of it. That's the beauty of this space with the blockchain technology and cryptocurrency. We have, the centralized side merging with the decentralized side, and you still have your options to be able to invest the way that you want to invest.
Yeah. Okay, interesting. So Raphael's asked, is it still possible to buy Luna, or is it off the market?
Yeah, I was looking at that. So I was just it's still on Binance, it's still on FTX. There's a lot of people gambling that they'll restructure, they'll figure something out to fork the chain. So yeah, I mean, you could still buy it. It's going for thousandths of a cent, but obviously probably not recommended at this stage.
So actually their chain is being voted right now. It's actually ended. It will end in 4 minutes, and it looks like it's going to be approved. And what they're basically going to do is they're going to rebuild the network. Basically, they're going to, like Ben said, fork it. Fork it just means that they're going to split from the original chain, and they'll take like a snapshot before the attack. So they will disappear. USD will disappear from the chain. They will not use that as stablecoin anymore. And the holders of Luna will then change to something called Luna Classic, and they will receive like airdrop of the new tokens, so to speak. So, I mean, I agree with Ben. If you're going into these in the scale of risk, this is in 1 to 10, this is 15. So it's way above that. So I mean, if you want to put some couple of hundreds of dollars in there, then I mean, go for it. But understand that this can pretty much go to zero as well.
Okay. Yeah, there's going to be a lot of financial incentive to make this work. But how many, and now complete faith has been lost in the project founders and the foundation. It's really hard to see them building something that, under this name anyway, that comes out and succeeds, and it's not just exit liquidity for the people who are stuck in there. So definitely proceed with caution on this one.
Yeah. Okay, I'm going to move us on from Luna and talk about what's been happening with the cryptocurrency at large, really. So I mean, Bitcoin was up at 60 plus $1,000 for one Bitcoin at one point, less than a year ago, and where we are now at around about 30. So who should I pick on? Aaron, what happened? Where's it all gone? Why is it crashing? You got a Bitcoin t-shirt on. It seems like appropriate to start with you.
Of course, the market is bleeding out per usual, right? So with Bitcoin, we normally, I mean, this is part of the market cycle. We'll see, huge gains, and then we'll see, a 20, 30, 40% pullback in the market. And of course, a lot of it does happen to, do what's going on globally. With cryptocurrency being more accepted as an actual real asset now, people are looking at this thing and saying, okay, I can put money here, as well as I can put my, money in my traditional investments now. But at the same time, when people are panicking, because a lot of times we're trading, emotions, we're trading, what people are thinking. A lot of times we're going to pull money out the stock market. We're going to pull money out the crypto market too. It works the same way. Ultimately, we've seen these, these massive pullbacks, 20,000 to 3,000. And then where did we go? We went to 60, right? So, I mean, this pullback is essentially, if we're just following the cycle, I mean, it's normal. It's on sale. We don't know where the bottom is. Of course, if we look at technical analysis, we can see where we can find a support level maybe, but we don't know what it's going to do. But ultimately, it's up in the air. But to me, this is just normal. It's another buying opportunity. The least the dollar cost average in. You know, don't go and buy a whole Bitcoin, but you know, just a little bit by little. You know, accumulation is the key.
Go on, Seb, expand on that dollar cost averaging. I know you know what that means.
Well, basically what Aaron just said is just buy along the downs or the ups, right? Don't focus too much on the actual price, but focus more on a strategy. And I would say, okay, if the strategy is to accumulate, let's say 1 Bitcoin, maybe don't buy 1 Bitcoin right away, but spread it within 2 months, 3 months. And that way you take advantage of the ups and downs of the market. And in the end, it will play well in the long term, like Aaron said. I also believe, I don't think Bitcoin is gonna collapse to zero. It might collapse to 3,000 again, for sure, but it's very well founded within the infrastructure. So I honestly don't think Bitcoin will disappear, or it's not going away anytime soon. And actually, there's a lot of stuff going on that crypto space. A lot of more companies are accepting payments on Bitcoins. I think Emirates announced they're going to accept payments on Bitcoins as well. So a lot of the normal industries are actually accepting the idea that cryptocurrencies can be a form of payments. So I don't see going to disappear anytime soon. That's why if I recommend a cryptocurrency, I always will recommend Bitcoin or Ethereum, especially in the bear markets, because the rest are just too unstable.
What do you reckon, Ben? What's been happening? Why has everything been falling? Well, not everything, but the main ones.
Yeah, I mean, just if you take a step back with the situation happening with the world, and probably over the last 2 years, the crypto space has been using the narrative that, you know, inflation and quantitative easing and these concepts are good for Bitcoin, because it, you know, is the safe money and a hedge against inflation. They were pushing that narrative, but I mean that works to an extent until, you know, the market becomes too weak. There is no more money coming in, and then a lot of these players, as always, are over leveraged at this cycle of the market, and everyone knows what happens then. But I mean, in general, crypto markets are more dynamic, they're more amplified than regular markets. So, you know, I guess we're at probably a 60% drawdown from the top, which is kind of what you'd expect. You know, based on the last cycle, it was much more than 60%. I think it was 70 or 80%. I think we're at a range now where, again, not financial advice, you know, it feels like things have reset a little bit. And, you know, over the coming months, I feel like things are more stable, and we've gotten a lot of these, you know, leveraged products out of the markets now, including Luna, right? I mean, that was like a time bomb. It exploded, and now here we are. So yeah, I mean, yeah, I'm not a financial advisor. I'll leave that to you guys, but yeah, no reason to panic, I guess, is the bottom line.
I mean, if you really want to take the approach of the macro markets in general, what I will be looking at is the inflation figures for next month. So if inflation figures next month come positive, the market will continue going and bleeding a little bit more. If the inflation numbers decrease a little bit, even by 0.2, 0.3, 0.1%, it's a sign that inflation is receding and that we should start seeing economies kind of start picking up. We'll see the SP 500 picking up. We'll see the stock markets in the globally will start picking up. And if China, and this is a very macro and very local for us, we managed to overcome this situation of COVID, which has crippled supply chain heavily, heavily crippled supply chain. And I think the world should start seeing a huge growth in terms like we've never seen since 2020, because think about this, everybody is just waiting for everything to kind of come back to pre-COVID levels, right? So we've been in this kind of like pushing down for 2 years, that at some point we just have to kind of say, all right, we're enough with COVID, this is done. And all right, we come back to work and normal supply chains stabilizes and market stabilizes and everything comes rolling as well. We only have the situation with Russia. That one will be more tricky to solve, I would say, but we'll hope that it will be kind of like finish the war in time soon and also stabilize prices on food as well. So key economic indicator, I will be checking inflation. Inflation numbers next month, very important. And then decisions will be made, I guess.
Mm-hmm. Yeah, that's a good point. I'll jump in there. We talked to a lot of institutions in the space, and a lot of them were coming in at rates we hadn't seen prior to this, probably 6 months to a year ago. So, I mean, what that means is you have crypto native institutions who are kind of waving the flag, and I mean, they're in at this point, right? And you have some very big players, and actually some of them got really, they got hit on the Luna situation. So that was a little bit damaging in that regard. Beyond that, you have more like riskier hedge funds from TradFi who started trading in crypto just because it's like the minor leagues. So those guys are now probably reassessing some of their risk, management tactics for crypto. But they're not going anywhere, right? They put a lot of investment into this. I mean, you see players like Jump, they took a huge loss, but they're not going anywhere. And then beyond that, I mean, you have more, established players like family offices and, pension funds. They were close. There were a lot of them that I think were really warming up to crypto. And this might be the biggest setback if some of them say, wait a minute, let's see what's actually going on here. But I think long term, the trend is still heading this way. And so it always takes some time. And then the smart, institutions are going to be the ones that get in right now at this stage of the market. And then after that, some more savvier institutions will come back. And then last, retail will come piling in when we're back at 60,000. And that's how the whole market works, right? So I think there's going to be a cooling off period. I think, like Sebastian mentioned, would be good to see some, the overall economy showing signs of recovery as well. But yeah, I think there's a lot of money on the sidelines, and it's only a matter of time before, they come in, because the builders are not going anywhere. On the project side, we see so many CVs coming across our desk every day from guys from, places like Google, just big Web 2 technology providers who see the value. They enjoy everything about this space, and they want to build something innovative, right? So as long as the developers are flowing in, then that is kind of a leading indicator on, the innovation in the space, and then what's going to follow from the financial side.
Yeah, I agree with Ben on that one.
That's a major key, what Ben just said there. I don't want to go too deep into it, but with the developers coming in with the whole digital space, switching over to Web3 now, with more people learning how to write and code smart contracts, with the whole metaverse deal and NFTs, everything is literally connected. A lot of this starts with cryptocurrency. Cryptocurrency is what is going to be used, in the metaverse, with NFTs, with Web3. That's a big thing there, Ben. I'm glad you gave us that insight. And ultimately, the writing's on the wall. Of course, this is minor little setback. Pump the brakes, of course. But like they say, publicity is good. Bad publicity is also good publicity, because now it's really getting people to look at this thing like, okay, what's going on here in this space? And what's the potential of what we could see in the future? Yeah,
I mean, we're licking our lips from a hiring standpoint, because 6 months ago, you couldn't hire a blockchain developer. If any blockchain developer worth their salt, they could just create some NFT project on OpenSea, mint it and make really good money, right? With very little preparation. But now it's very different. The tables have turned. Some of our investors have come to us and said, it's a hiring market now. Just be patient, raise your standards, and there's going to be a lot of talent available. So for people who are really building in this space, these downturns are sometimes very good, right? So as long as the runway's there, then this is where the noise dissipates. The hiring increases. The investors are less profit driven. They want to see more innovation in building, which is always good for the project, because sometimes you exist in this crypto space where retail is constantly in your community, in your ear saying, why isn't the token going up? Everything else is going up. So now it's very calm and you're left with the long-term people. For us, I mean, this is obviously not something that we're too devastated about.
Excellent. Well, that's good to hear. And I think I find it really interesting. I would say my knowledge on the crypto space is nothing on you guys. Certainly from a market point of view, I find it really interesting that it's actually following very similarly the economic factors and what's going on in the world. Cryptocurrencies are following in similar patterns, which I find very interesting, very different to the conversations that originally had about, say, inflation hedges and digital gold and all this kind of stuff, which it seems to be moving away from. But really, really interesting, really exciting that things are moving on. We had a couple of questions in. I'm going to jump on and get the audience involved. What's your take on ADA ADA / Cardano? What do you expect from the oncoming forks? Who wants to jump on that one?
I can address a little bit of that one. Cardano, Cardano is created by the co-founder of Ethereum, actually. So Michael Hutchinson, I think is his name. Really good developer, I would say. However, I think ADA is suffering a lot of things, like, for example, when you create a cryptocurrency and the market is demanding you right now, especially right now, where is your value? And you have a tough conversation or tough of pointing out what your value is, then you kind of suffer. I think Cardano, the problem is, for me, it's like I see Ethereum as the father of all of them. And to be honest, once Ethereum 2.0 goes live in August, I don't see how there's going to be a lot of competitors that are going to be wiped out, because you have to understand 95% of all smart contracts are written on Ethereum. So that means that the utilization of Ethereum network is considerably big, right? I'm not saying there's not going to be competitors, but I'm just saying that there's so many competitors right now that it's really hard to pick which one will survive. So I don't know. I mean, from a point of view, I have better networks that I like to work with. For example, Polygon, I think it's much better than Cardano by far. I think the people of Avalanche are doing well as well. Optimus is interesting, Phantom as well. And I think Cardano hasn't really stepped up their game in terms of developing smart contracts, in terms of doing all the things that the other people are doing. So the problem with this space is that it's really short term in terms of your life. So if you don't innovate fast, you die. So I think with Cardano, I will say you have to wait and see what happens and see if they develop the smart contract technology that we're promising, and see how Ethereum 2.0 comes out and the other players also accommodate to that.
Okay. Interesting. So, Ben, I'm going to fire this one at you. When do you think the merge Ethereum will happen, and how will it affect its value? That's from Michelle.
Merge Ethereum. Are you talking about Ethereum 2.0, Michelle?
Yeah, that's confirmed for August.
Okay.
Vitalik confirmed it the day before yesterday. So it is confirmed. How will it impact its price? We're going to see a huge reduction on certain things, on, like, for example, fees. We're expecting reductions, but it's really we don't really know. But we're expecting that the price of Ethereum go higher, because it will basically kind of put it in a more, it's easier to handle network. Basically, you're going to have more transactions, more speed in the transaction, so it can handle more volume, which is something that they need.
Yeah, I would say I'm probably not a subject matter expert on this one, but when you talk about like what happens to the price, I think a better question is, how well is it handled, right? If things go very smooth and people have a lot of confidence, and then the network shows signs of being more scalable, then I think that's very bullish for the price, right? Generally these events, they tend to be sell the news, or buy the rumor, sell the news to some extent. Not saying that's going to happen in this situation, because things are pretty oversold across the markets as it is. But yeah, we'll see. I'm really wanting to see some execution from Ethereum, but even if we don't, the situation on Ethereum has been the development ecosystem is, out of control at the moment, like just so many new protocols. And especially now that things like Luna, a lot of people are thinking, oh, do I really want to be on these kind of what we call alternative L1s? Ethereum, it's slower, it's more expensive, but it is battle tested. And for investors, that's very important. Yeah. So, I mean, that's gas. I think gas is probably its lowest point in years right now on Ethereum. It's really cheap to do things. Yeah. So, yeah, well, hopefully, just to get back to the point, like hopefully this merge, it's a sign that things are progressing for Ethereum. And then I think that would be, that would lead to price later on.
Yeah, I agree.
Okay. Nice. So Aaron, I wanted to ask you, I know we were talking about it before. So what should people be doing? We're in a bear market, if we can call that. It seems bear market seems to come around in crypto more than any other market. But we're in a bear market at the moment. What can people be doing? How can they make money? Or how can they be investing wisely, should we say?
Yeah.
What are your thoughts?
Sure. So at the end of the day, of course, it's great to have some cryptocurrency to diversify your portfolio with different coins that you believe in. Of course, always do your own research to whatever crypto project that you're looking into. But ultimately, once you have crypto, whatever the project is, a lot of times you can either look at, for one, staking it, or you can look at two, participating in liquidity pools. Of course, staking essentially is, putting your coins, locking them up for verifying transactions on the, of course, the micro level. That's what we're on. Not too many of us are probably going to be on that macro level of, running an actual node or actually being a validator. But for us retail investors, we can, stake our coins either on the exchanges that you're purchasing them on, or for me, I like to actually stake coins in certain wallets. I've always been a big believer as well as, if you buy your cryptocurrency, if it's, something you're going to be holding long term, go ahead and transfer it to your wallet. There are wallets out here that do allow you to stake your coins in them. That's definitely a huge thing. And then the other side of that is the coin that necessarily that you think you're going to be holding for a while as well. You can look around to some of these liquidity pools and actually, pair it with another coin. Sometimes a stable coin, sometimes it's like Ethereum, whatever it is, depending on what network you're looking at. That's also going to allow you to generate some passive and residual income. Both staking and liquidity pools will, give you you'll see some nice numbers, 100% APY, 200% APY, some of that stuff like that is like, wow, they're really going to give me all this. But at the same time too, look at some of the ones that, seem more realistic to you, 5, 10, 15, 20%. If you're going to be holding these tokens long term, that's definitely going to be able to give you, an extra boost or extra buffer on top of what you're already receiving. And most of the time when you are staking or providing liquidity for a project, you're going to be getting, more of that coin. So it's in a constant accumulation. It's another way essentially of dollar cost averaging for just holding your coins. Now, of course, the downside and the risk to that, because there's always risk involved, is with the volatility in the market, we get in, the market takes this huge downside like it is now. If you end up selling, then you're going to take a loss. But ultimately, if it's something that you really believe in, you're going to be holding long term, there's definitely going to be some huge benefits of you staking or providing liquidity to certain projects that you believe in to get that extra passive residual income.
Okay, that's interesting. Is that something that the rest of you guys utilize? Is that?
I mean, I would just add, don't invest what you're not able to lose, basically. I mean, don't put money that is basically going to cost you your life, literally speaking. So, I mean, like I always said, right? This is financial advice. Diversify assets. Put a little bit on that asset because it will give you a little bit of risk exposure that can come really handy when things go up. But always diversify. Speak to professionals. That's always what I always say. We do this 24/7. We literally stick to news and macro environments, economics, and things like that. So I'm pretty sure we know a little bit more of things that normal people. And yeah, I mean, that's the only thing that I will suggest to people.
Mm-hmm. Just to add on, it's to say, don't direct this question to me because I tend to be pretty crypto maximalist. You know, I was bullish at the top. I'm more bullish now. You know, and obviously, you never want to go flying into a bull market at the top. But you know, this is for me, like based on what we're seeing in the space and the amount of players and the innovation that you know, as long as you're sticking to majors, you probably can't go wrong. So yeah, I mean, there's going to be a lot of people who emerge from this cycle and do very well, right? And you can't let the current, you know, global situation, you know, completely scare you off. But you know, I'll leave the financial advice to you guys because you're the professionals. And I'm just very confident as a whole.
That's good. And
I
think
there's
go on, Seb.
There's nothing wrong to be confident, but having a little bit of skepticism is also good and healthy. So that's why we always recommend, look, I mean, have your crypto assets as well, but have cash for a rainy day, but have stock investments as well, had a house investment as well, buy to let or whatever. It's just trying to, all right, one market went down, you have the other markets too, you can hold on. So it's just a little bit of healthy situation when it comes to investment. Because trust me, we've seen it many times. We've seen it many times. People put all of their money into one thing, they lose everything, they have to restart everything. And that's a position you don't want to be in.
Yeah, absolutely. I mean, I wasn't coming from a standpoint of, you know, investment advice. Mine was just more my personal philosophy and opinion on the space.
Yeah, which is good. And yeah, that's what you'd expect you to be as well. And I think it's yeah, I think we're all, the reason we're holding this webinar, you know, we are confident on it, we are confident on its future, but you know, in terms of how you're putting your assets and distributing your wealth, yeah, I mean, you know, I don't want to throw around numbers, but you know, certainly I tell my clients, you know, 5%, maybe 10% if you're super confident and you're quite young and you've got plenty of time for it to go through quite a few different crashes along the way. Which is definitely going to happen. I'm going to wrap up there, but I think I'm actually touching on Jeff's point as he says it, is that actually, you know, we are big believers in diversification. We're big believers of, you know, actually making sure that you are safe in various different markets. But what we want to make sure that is actually you do have some exposure, and actually, you know, is it worth putting a little bit of your money into it? Probably, because, you know, you've turned up to a crypto webinar, so you already want to learn. But if you put a little bit in, something, again, like Seb said, that you can afford to lose, by putting some money in, you're gonna learn, you're gonna show more interest in it, and then you're gonna develop your knowledge. Because I think what we can all see, certainly, especially from Ben's confidence, is that the space is going to be around, the projects and developments are going to be around, regardless of whether you can make money on a cryptocurrency. So it's going to be something that we should be getting involved in and be interested in, right?
Right. I think the attraction of the crypto space, you know, it's not like buying commodities or something where you can't really influence the price. But with crypto, you know, you get into a new protocol, right? We have DAOs where people can join and contribute to the product, to the project in a lot of different ways. You know, you can use the protocol itself. You can learn more about everything that's going on. So it's a much more interactive investment experience than just, you know, buying oil, right? So this is something I would encourage, that, you know, the bear market, if you are interested in crypto, don't just buy it and leave it sitting on a centralized exchange. Just definitely get involved and find out where the communities are. If it's on Discord or if it's on a forum, you know, talk to the developers. They're very accessible, and you learn a lot, and you actually have a chance to, you know, have an impact on the space as well. So that's, for me, that's the attraction, right? It's not just about money. It's about, you know, growing. And I mean, obviously that's how I got deeper and deeper into the space myself. So it's something to do if you're sitting here wondering, you know, when is your investment going to turn around in the next 2 years?
Yeah, absolutely. Excellent, guys. I'm gonna wrap it up there. It's been a really, really good session. If you do have more questions, we have the WeChat webinar group. So please do throw your questions in there. If you're not in that group, please reply to the email that you received the Zoom link from, or whomever invited you. Ask them to get thrown into that group. And I'm sure that if anyone wants to reach out to Ben and ask more about what he's doing. What's the best way to contact you, Ben? If they send us an email, we forward it on to you. What's the best way?
Yeah, the email is going to be ben@woo.network. You can also find me on Twitter at Ben York. That's YORKE. But yeah, that's or you could just bug Will and he'll send you my personal information.
Yeah, no problem at all. If I want to know more about you, or if you're in the West Coast area and you need a good goalkeeper, then I can recommend Ben as well. But yeah, excellent, and thank you Seb and Aaron, excellent inputs. Thank you Ben, fantastic stuff. And obviously, hopefully you know what about Devere we do. We give them financial advice to people, expats in China. So especially with everything that's going on at the moment. Lockdown, market volatility, not just crypto, there's plenty going on in the stock markets as well. If you want to just have a chat with us, reach out to us. We're always here and welcome to talk to you. And lastly, I'd say everyone, if you're in Shanghai, stay safe, stay sane. It's a difficult period. Hopefully a few of you are starting to get out and about. There's a few signs that this is ending. So Devere here with you, don't worry. And yeah, have a great evening everybody, and thanks again guys.
Thanks, William. Bye.
Bye.